The countdown is on in Europe. This is Bloomberg Markets European Close with Guy Johnson and Alix Steel.
Tuesday the 12th, 30 minutes to the close. What do you need to know out of Europe this hour? Well, the EU's debut green bond issuance producing record demand, 135 billion euros worth of orders. The question that everybody's now trying to figure out is, will rising energy prices knock the sustainability targets that the EU is setting itself off course? We'll talk about that throughout this hour. The UK Brexit Minister Lord Frost has been speaking within the last few minutes, basically indicating that he thinks that the Northern Ireland Protocol is broken. He thinks that we now need to negotiate a replacement. He's saying the next few weeks will be absolutely crucial in that negotiation, though the expectation is that nothing really happens in terms of setting light to this whole thing and triggering Article 16 until after we've got through the COP conference. Joe Mays, our colleague, just asking him a question in Lisbon as to whether or not he's prepared to risk a trade war with the EU. And German investor sentiment, Alex, continues to fall as global supply chain bottlenecks and a surge in energy costs hits expectations very, very hard. European equity markets very much off their lows, but still negative. This is the picture right now. We're down by only 0.2%. We've also seen a little bit of a fade on crude today, but basically markets, I think, Alex, just kind of in a holding pattern, though it doesn't feel like it in this show, as we await tomorrow's CPI data. We've got a lot coming up from the Fed, and we've obviously got retail sales coming up Friday.
So let's talk about inflation for a second, because the Federal Reserve Bank of New York survey just came out, and really interesting reads on inflation. The American household expectation for inflation 1 year out rose to 5.3%, and inflation expectations 3 years out rose to 4.2%. Both were the highest readings on record in the survey's 8-year histories. However, the Fed says that longer-term inflation expectation is still well anchored. So let's take a look at that, Guy, for just a second. So I'm going to skip ahead to the bottom line here, which is the five-year forward break even here, 236. Yeah, it's higher. It's maybe the highest we've seen in about 4 years or so, but it is still pretty well anchored, just above 2%. So the Fed may be looking at that, seeing that that's correct. So let's look at the equity market now for a moment. You get banks kicking off tomorrow with JP Morgan. Financials pretty much flat, but the KBW, for example, I mean, killer run over the last year. The VIX a little softer, but Moderna, one I wanted to point out, up now 0.6%, did drop to session lows. The FDA is reviewing a possible booster for the Moderna vaccine, and they say it's not known if there will be increased risk of myocarditis or other reactions with a booster. So now a little bit of question marks around that booster problem, Guy.
Yeah, Alex has been paying attention to this news on a daily basis, waiting for the news on what is happening with Moderna.
That's my parents, man, you bet.
Yep, absolutely. Everybody's focusing on that myocarditis issue with the mRNA vaccines, an issue not only for the elderly, but also for the kids as well, as we try and figure out exactly how you get the dosing right. Let's get back to the global economy. Let's talk about what is happening with this inflation story. So the global economic recovery is apparently losing momentum. This, according to the latest IMF forecast. Chief economist Geeta Gopinath spoke to us in the last hour.
We would like to see broad-based inflation again at the kind of levels we're used to seeing. Now, the question is, if that spirals out of control and you start ending up with very high inflation numbers, much above the comfort range of central bankers and of people in general. And there, we're not seeing that yet.
And investors are reflecting this as well. You certainly see this in the German investor sentiment survey that came out a little bit earlier on, the ZEW, or as some call it, the ZOO. My team just call it the Z, which I've never quite really understood.
Anyway, it
felt, yeah, you call it the zoo. I think somebody else called it the Z. I call it the ZEW. But anyway, it is down for the 5th consecutive month. Supply bottlenecks very much weighing on Europe's largest economy. In fact, the whole of the Eurozone as well, certainly a factor. The conversation is pretty straightforward. It is growth fading? And the IMF talked about this. And is inflation picking up? Now, it's hard, I think, in my mind, to talk about stagflation when you have growth that is so far above potential. But maybe we go next year into a slower growth environment with higher inflation. Let's figure this out. Where are we? Is this whole conversation about stagflation useful? Bilal Hafeez, Macro Hive CEO and founder, joining us now. Bilal, your take. Where do you stand?
Well, where I stand is I think the clearest signal we're getting is that we're having a loss of growth momentum overall. I think that's the clearest thing. On the inflation side, I think the picture is much more difficult to ascertain. Certainly, we are seeing very high inflation in some segments of the economy, but at this stage, it's really in all the supply-constrained parts of the global economy, whether it's chips or whether it's commodities. Outside of that, I still don't think that we're seeing broad-based inflation. So for me, the clearest thing really is we're seeing more and more signs of weaker growth and more shocks that will lead to weaker growth. And energy is the latest thing that is impacting growth in a negative way.
So is it fair to say slowflation versus stagflation, and that obviously the position and the aftermath of that will be different?
Yeah, I think so. I mean, for me, I think we're more in the slowflation environment, and I think that
She makes
is
words
the challenge.
I do. I make words
Yeah,
up.
it's getting quite confusing now. Slowflation, transitory stagflation. Guy, I think you were saying earlier, trans-stagflation. So there's all these sort of different terminologies we can use, but I think that's the bigger challenge here. How do you deal with all of these supply interruptions, and how will markets respond to that?
Should central banks be tightening in this environment?
I don't think they should, but obviously there's a lot of pressure for them to do something because headline inflation is very high, and that's the types of numbers that the average person on the street will react to. And certainly, if you look at surveys across the US, people are starting to view the inflation levels that we're seeing as a negative factor. So there is pressure politically for central bankers to do something, but the reality is that it's not easy money per se that's leading to higher inflation. It's really supply chain issues that is leading to higher inflation. So if you want to moderate that inflation, you have to have some kind of supply side efforts to bring that down.
So what's going to be the impact, and let's just stay with the BOE for a second, as it does feel like they're going to be somewhat of an outlier, particularly when it comes to sequencing. RBC says you could see 130 on the cable rate on this kind of policy mistake. What do you do with that?
Yeah, I think that's absolutely right. I think the UK in some ways is facing the worst mix of everything. It has relatively high inflation, similar to what we've seen in the US, more so than, say, the Eurozone, China, or Japan. Moreover, it's, of course, suffering from all the supply shocks. Then on top of that, we're seeing the full effects of Brexit as well. And I think one of the interesting things about the UK was that because Brexit happened at the same time as COVID, it was hard to say whether Brexit was having any impact because the COVID effect was so strong. But now, as the lockdown restrictions have eased, we're now starting to see the negative impacts of Brexit. So we're seeing an additional shock to the UK, negative shock, which is coming from the trade side. So my sense is the UK's biggest challenge right now is on the growth side. And so the question here is, how do you stabilize growth rather than worry about inflation? And I think there's a real risk that the Bank of England is making a mistake here if they do hike.
Bilal, I want to go in the direction of what's going to happen with the upcoming earnings season, and I'm trying to figure out whether or not actually Europe and maybe the UK is really kind of at the epicenter of all of this, but Europe is more exposed to these negative narratives that are coming through in terms of energy, what's happening with the supply chains than the United States. And I'm trying to figure out, in terms of what I'm therefore going to get from the earnings season, whether or not actually US equities in terms of their guidance are going to be outperforming what we're seeing in Europe.
Yeah, I think that's absolutely correct. I think the challenge for Europe is, or Euro area, is that they're suffering from the energy shock, which the US isn't in the same way as the US has its own energy production. It also suffers from a China slowdown in a way that's more acute than, say, the US or even the UK as well. And then also the other challenge, I think that's probably a bit more subtle, is the fact that Germany is in the midst of forming a new coalition. And so there isn't an obvious fiscal policy response that we can expect anytime soon. We need a coalition to be in place and for announcements to be made. And that will only really happen towards December. So I think the Eurozone is particularly vulnerable in this environment. That doesn't mean the US won't also have a challenging earnings environment, because certainly if you look at earnings expectations for this current quarters of earnings, it will be lower than the previous quarter as well.
So, yeah, a relative play on that. So the move where we've seen money flow into European assets, particularly as the value trade kind of overtook the growth trade, do you think that unwinds? And if so, like, where does that money go?
Yes, I do think that will start to unwind. I think the European trade in reality works really well in a reflationary environment where growth is picking up. The yield curve is steepening more because of growth prospects improving in kind of generally a good environment. The current mix of everything is not necessarily the right environment or the best environment for Europe, especially the industrial sector in Europe. And then at an associate level, the financial sector will also struggle if the industrial sector is not doing so well. So I think the money will start to leave Europe, and it could potentially go back into the US tech safe haven type trade. So I think that could be one flow that we could see in terms of equity flow. Alternatively, it could just simply go into cash, more kind of risk averse type environment. And of course, it will go into crypto as well, as we kind of have to recognize that as well.
Okay, well, let's park the crypto thing for a moment. Bilal, stick around. I want to talk about what's happening with the green bond story here in Europe as well. Massive amount of demand today. We should talk about that more. Bilal Hafeez, Macro Hive CEO, is going to stick around. Alex, we were speaking with Kai a little while ago about the Boeing numbers. We're now getting those numbers from Chicago. Boeing reporting 111 jet orders, 85 deliveries for the third quarter. The numbers, if you want to find them in more detail, are on the website for Boeing. Delivered 26 of 737 MAXs in September, 62 in the third quarter. Booked 27 gross orders versus 5 cancellations in September. The issue here basically is that they're having to push out the 737s as quickly as they can, but they're slightly struggling to do so. That's where the cash flow needs to come from. But the 787 program is still effectively stalled from a delivery point of view, which again is going to be a huge cash drain. And we'll continue to watch for progress on what is happening there. As I say, in a moment, we'll talk about the green bond story here in Europe. We'll get an update. We'll go back to Bilal. That's coming up in a moment. This is Bloomberg. In London, I'm Guy Johnson. Alix Steele's over in New York. This is the European Close. We're here on Bloomberg Markets, just for you. So let's talk about what is going on in the debt markets. A blockbuster debut for the EU's green bond. First green bond, the debut green bond. It saw a record $156 billion worth of orders. And it's just the first of a €250 billion program of EU green bond sales, basically which are earmarked for the coming years to drive the transition to a sustainable future. For more, we're joined now by Jill Ward, Bloomberg FX and rates reporter. Jill, we always knew that this was going to receive huge amounts of demand, that the order book was going to be absolutely stacked. Did it live up to expectations?
Hi, thanks for having me. I would say it lived up to expectations, possibly even surpassed expectations. I think most analysts were expecting this to set a record of some sort. Today we had record demand and size for this syndication. So it was really quite something. And I mean, it's also worth noting, we were always expecting this, but there's been quite a bit of sovereign bond, green bond issuance in the euro area this year. And this is, just another one, and yet demand was still so strong. So I think it's safe to say that supply just hasn't caught up with this demand yet.
All right, Jill, thanks a lot. Really appreciate Bloomberg's Jill Ward breaking it all down for us there. We also have some breaking news for you. Vice Chair of Fed Rich Clarida says that inflation risks are to the upside. That's the latest headline. That's in remarks of a text of his speech. He does say that moderation in bond buying pace may soon be warranted, but tries to make that distinction between tapering and a rate hike. He says tapering is not a signal on the timing of rate liftoff, and that underlying inflation hovering close to the Fed's 2% goal. It does not necessarily seem that anything here throws the Fed off track, potentially for an announcement of a taper in November, when they pull the trigger, maybe December, or in November. Just taking a look at the bond market here, you have some buying still coming in. You got yields down by about 1 basis point. 1.6 is where we stand, so not a ton of movement within the bond market. Still with us, Bilal Hafeez of Macro Hive. Hey, Bilal, in relation to the green bond story, and then we can definitely hit these Clarida headlines with you as well. Do you want to own a green bond issued by the EU? Do you want to pay up for that?
Well, I think it depends what your underlying mandate is as an investor. I mean, certainly there's a huge amount of pressure from asset managers to have exposure to ESG and to have exposure to green bonds. And so the EU issuing these bonds and becoming one of the largest issuers, and there's a clear green taxonomy, it's a very sort of safe thing for investors to do, to buy these bonds, have exposure, and have the confidence that the bonds you are buying are green, according to one of the leading environmentally sensitive regions in the world. So from that perspective, I think it makes a lot of sense. Whether it makes sense from a pure returns perspective, that's less clear cut, because these bonds trade at what's called a greenium, which means that their yields tend to be a bit lower than a normal bond of a similar credit rating. So your yield will be lower. So I think it's useful if you have a mandate and it's an easy way to get that exposure. But from a return perspective, it's less interesting.
How inflationary? We're about to spend a lot of money moving society to a more sustainable future, Bilal. The money that is being raised here is going to be used to drive that. How inflationary is that process going to be? Do we actually have our arms around sort of what is going to happen? Because we've got a lot of money, we're raising a lot of money in the bond market. The EU in particular is determined to make this transition. It wants to make this transition relatively quickly. My concern is that A, this is inflationary, and B, that society's not quite ready for it. We're seeing what's happening with energy prices at the moment. Do we yet have an understanding what the economic impact of this is going to be?
I think you're right. I think we're only now starting to get some sense of what the economic implications are. I mean, for me, there's kind of two channels through which this has an impact on the economy. One is it leads to potentially higher growth, because if governments invest in the green sector that would not otherwise be invested in by the private sector, that creates new end sources of demand. But the more difficult side is, what does it mean for your existing use of energy? And you end up with all of these strange dynamics where in Europe needs to increase its investments in industrial size of batteries to promote the use of electricity as cars go electric and so on. But the Europeans won't buy those batteries produced in Asia, because those factories that produce those batteries in Asia are powered by coal. So you end up with a shortage of batteries in Europe, which means that you can't have the electricity that you need to power electrical vehicles. So there's all these sequencing issues where if you take a purist approach where you don't want to have any exposure to coal, then you don't build the infrastructure you need to allow this transition to happen. And I think that's the challenge which we're in right now, where there's a sequencing issue of, you do need a lot of energy to transform the energy system to a new one, but how do you power that transformation? And renewables alone won't be enough to do that.
So how do you make money off of this, Bilal?
Well, the way to make money off this is to understand that in the end, paradoxically, there will be a lot more demand for fossil fuels than people would initially anticipate. So there's been chronic underinvestment in the fossil fuel sector. And, if you end up in a world where there's scarce energy resources, those assets, those commodities will be bid up. So that means you need exposure directly to those commodities, whether it's oil, natural gas, or you need exposure to the energy sector in general.
But coming full circle, Bilal, as we suggested at the beginning of this conversation, there are many PMs, the managers that have ESG mandates, and more people have them, that prohibit them from investing in those areas.
That's right. So this is where the challenge will be. So those managers will have to accept some underperformance over that period of time. I mean, of course, there are so-called sort of green sectors like tech, which may still perform well, but they'll have less of a universe of assets to investing that could potentially be profitable. So it'll be more of a challenge for these ESG investors. And at some level, there has to be this recognition that if you do have a sort of a non-profit restraint or constraint on your allocations, then you will have to accept lower returns as well.
Okay. We're going to leave it there. Bilal, great to have you along for the ride today. Thank you very much indeed for spending so much time with us. Bilal Hafeez of Macro Hive, thank you very much indeed. This is Bloomberg.
The key feature of the Belfast Good Friday Agreement is balance between different communities and between their links with the rest of the UK and with the Republic of Ireland. That balance is being shredded by the way this protocol is working.
UK Brexit Minister Lord Frost speaking in Lisbon a few minutes ago. Here with the latest on what was billed as a speech that was likely to escalate the situation between the UK and the EU is our UK Brexit reporter, Joe Mays, who was at that news conference. Joe, let's talk a little bit about what was said. This was expected to be a fairly blunt speech that was likely to raise the prospect of the UK triggering Article 16, i.e. basically blowing up the Northern Ireland Peace Protocol. The Northern Ireland Protocol. Let's talk a little bit about what we actually got.
Yeah, so I think the most concrete thing we got was the UK essentially presenting its own new version of the protocol in the form of a legal text and saying to the EU, we've delivered this to you, we're going to remove things like many of the customs checks in the Irish Sea, which is a big problem. There'll be no governance of the European Court of Justice in this new protocol. So, the UK has really put the ball in the EU's court here and said, look, do you want to accept this? We think this is a way to fix the problems that are occurring, and now it's for you to decide whether you will accept. And we expect there'll be talks, negotiations now over these legal texts. But yeah, it's a pretty big move the UK has just made.
Any chance the EU says, yeah, okay, sounds good?
Well, there might be a compromise landing zone towards which we are heading. It really does come down to how kind of theological the EU wants to be about issues such as whether the European Court of Justice does have to have oversight over what happens in Northern Ireland, given it does still follow single market rules because of the protocol. But we could see that, and we have these talks coming up. And to be fair, the UK tone was at times quite conciliatory from Lord Frost. I mean, I asked him very directly, are you prepared to risk a trade war with the EU? And his response was, well, we see many opportunities before we get to that where we could pull it back from the brink. So it does feel like we're perhaps heading towards some kind of compromised territory.
Yeah, Leo Varadkar, the Irish Deputy Prime Minister, saying within the last few minutes, most recent demands from the UK are, quote, hard to accept. The ECJ is there to adjudicate on single market rules. Hard to see how another court could rule on the single market. In terms of the timing here, Joe, we've got the COP conference coming up. I'm assuming that nothing's going to happen before that.
Yes, I think that's a very fair assumption. Lord Frost has said he wants to make a final decision about Article 16 in mid-November time. So yes, you'd expect they wouldn't want to burn any diplomatic bridges while COP is going on, because they'll need the support of the EU to get anything through there. So yeah, I think expect the next kind of crunch point to come in mid-late November.
All right, Joe, thanks a lot. We really appreciate it. Joe Mays joining us from Bloomberg. Not at all confusing. Thank you so much, Brexit. All right, coming up, we're going to speak to the French ambassador to the U.S. Lots to digest, whether you're looking at the power crisis, whether you're looking at fiscal discipline, whether you're looking at the relationship between Russia and Germany and China and the U.S. We're going to break that conversation down to you, especially as the close is up just about a few minutes away. This is Bloomberg.
So we're about to wrap up the European equity session. As I said at the top of the show, today a bit more interesting than yesterday, but tomorrow is going to be much more fascinating than today. The earnings season kicks off, CPI data out of the United States, potentially huge market catalysts on the horizon. Today, fairly flat. So the FTSE 100 in London down by 0.2%, the CAC down by 0.4%, the DAX down by 0.3%. We're off our earlier lows. Let me show you how the session has developed. But we're basically on the same kind of up trajectory that we were at the back end of yesterday's session. It's kind of continued today. So we've come up, and then to be honest, we've just gone sideways. The market is in a holding pattern waiting for what is going to happen tomorrow. In terms of the breakdown from a sector point of view, the miners have been a bit of a drag today. Utilities have actually had a fairly cracking day. So let's take a look at the GRR story. Utilities up here, up by 0.8%. Bond proxies. A lot of people, if you don't like your bonds, what do? This is one area that people are focusing. Real estate is the obvious other one. So if you're going to migrate out of one into the other, if you don't have the mandate. Financial services, food and beverage, all rising. So a kind of defensive tilt at the top end of the market. Bottom end of the market, basic resources, healthcare is in the mix there as well. Retail, remember retail sales on Friday, the insurance sector. But a fairly balanced market today and from a sector point of view. EasyJet down today, big loss coming, north of $1 billion. That's what the market is really focusing on today, it seems. But actually, if you read between the lines and listen to what EasyJet has to say today, actually reasonably positive in terms of it's putting capacity back into the market. It is expecting actually the acceleration to continue from here. So about 70% of pre-pandemic capacity. LVMH, MC, about to post numbers, huge company out of Europe. This is going to be hugely important. It basically kicks off the large-scale sort of story around European earnings. We're going to get it in the next few minutes. We'll have an analyst ready to analyse, as we would, those numbers, but LVMH waiting for that. And then Airbus. Today's numbers on deliveries were a little bit disappointing. They're on path to deliver around 600 aircraft this year from Toulouse and all the other factories. We've sort of stalled a little bit. The company has been talking about supply chain issues, but basically it's interesting. Citi out today saying, actually, we think they can probably do it. So Airbus only down by around 0.5% today, Alex.
All right, good story there. All right, let's go to the broader geopolitical issue of a special guest joining us, Philippe Etienne, a French ambassador to the U.S., and Bloomberg's Anne-Marie Hordern. They join us now in D.C. Anne-Marie, I'll hand it over to you.
Thanks so much, Alex, and welcome back, Ambassador Philippe Etienne, to Washington after your recall. And I want to start there, this spat between Washington and Paris following the AUKUS deal. Has the mood music changed between these two partners, this transatlantic relationship? Is it looking more positive following especially these meetings between Secretary of State Blinken, Climate Czar Kerry, all visiting Paris?
Yes, indeed. Thank you for having me. After this shock which was created in my country by the announcement, without prior consultation, information of my country, we have initiated, together with the United States, and after President Biden reached out to President Macron, and they had this phone call on September 22nd, we have initiated a process, an in-depth consultation process. And there has been already a lot of meetings, very, very substantial meetings, on the basis of our common goals, to decide which concrete actions which we can together take to rebuild trust, to rebuild confidence. And not only that, we have decided, the two presidents have decided in which domains we have to take this common strategic action between the United States and France to find again a trust between two important allies.
So you're talking about a lot of lack of trust. Over the summer, Prime Minister Scott Morrison had some questions regarding the submarines. Do you think that the French, was he just not clear enough, or was there a beat that was missing? Because the French seemed to be so taken off guard when this was announced.
Well, indeed, yes. We learned about this new deal in the news, actually. But as you said in your first question, now for us the most important thing, and we recognize that the US took the initiative to reach out to us, the most important thing, together with the US, I speak here only about the French-American relationship. We decided to move. Not yet done, we have still a lot of work to do, but at least we have this process, and it must lead to a meeting between the two presidents at the end of the month in Europe, when President Biden will be again in Europe.
We also recently heard from Bruno Le Maire, and he was talking about how there is divisions between Paris and Washington on China. He said Europe wants to engage while the United States wants to confront China. Do you think that division is going to be in how they approach China inevitable, that it's going to be a divided approach between Europe and the United States?
You know, I have been ambassador to the European Union, I have been ambassador to Germany, and then I have been NSA before coming to Washington. My personal experience, based on the facts, is that the European Union, not only France, but France, of course, was very active in this process. The European Union has moved to take into consideration all challenges linked with the rise of Chinese power. We have defined our European policy back in 2019, and as a combination of systemic rivalry, firm competition in the fields of technology, economy, and engagement with China on global issues such as climate. Frankly, what I hear here in the US is not that different. We might have our own position because we are not exactly the same place. We have our own relations with China, but frankly, we share quite a lot of principles here according to this definition we have given, and we are following in practice of our relations with China.
Ambassador, good morning. Guy Johnson in London. Thank you for your time today. President Macron has looked at Europe first, basically looking at a foreign policy, a global approach that is less dependent on the United States. Does France, does the Élysée Palace have the support of the rest of Europe for this? Is Europe going down this road of looking to be more independent? Or do you think that the transatlantic relationship will remain as important as it's ever been?
But you ask the question as if there was a contradiction. It is not the case. We want in France, like in all European countries, keep a very strong European transatlantic alliance between, in particular, between the European Union member states and the United States and all other NATO members. But on the other hand, we think that, and it is one of the main topics covered by our strategic discussions with the US right now, we think that to have a stronger European ally, to have a stronger, more capable European defense complementary to NATO is good for the US, is good news for the security of the US, because if you strengthen one pillar in an alliance, the European pillar, you strengthen the whole alliance. So we see things as going together.
Ambassador, it's Alix Steel in New York. Thank you for joining us. How does that work if Europe isn't aligned on all the issues? And I'm thinking specifically energy, whereas Germany is dependent on Russia for a lot of its gas. France gets some gas from Russia, but it's mostly really focused on nuclear, whereas you have Hungary blaming the EU Green Deal for the energy crisis. How do you guys fix that?
It is true that we have in the European Union different energy mixes. You have recalled our different positions towards nuclear energy, but we have a strong EU policy on climate transition. The European Union is a world leader in terms of reduction of emissions against the climate change. And so the European Union actually is through the years has developed, keeping some differences, even in important domains between its member states. It has never, look, France and Germany, for instance, the European Union, I was ambassador in Berlin. I can tell you that the Franco-German cooperation, which is one of the foundations of the European integration, never meant that we always agreed on everything. On the contrary, it is because we take some different positions, then when we agree between France and Germany, it is a very strong cooperation which raises prospects for the whole of the European Union, because we can bring something valuable to the other European nations. And in the European Union, every country has a part in the decision, but every country comes with its own decisions, and then we find common decisions. This is really the basic element of the European integration, and it works also in energy in spite of our differences.
Speaking of energy, it's under this administration, the Biden administration, that they're now back in the Paris Climate Accord. We have COP26 coming up. We have the Iranian nuclear negotiations being discussed. How worried are you and your partners that potentially, if there's another election and it was to be someone like the former President Trump who wants to disengage on some of those at international stage, that you put all this effort in, then it goes to waste? How concerned is it to do all this work now? Are you preparing for potentially that swing in U.S. politics?
First, when we Europeans in particular, we have kept the Paris Climate Agreement during the last 4 years alive and united the international community in spite of the withdrawal of the US, we have still benefited from the support of many US elements. Many cities, many governors, many businesses have continued to support the Paris Climate Agreement and goals. Second, we see every day the aggravation of the climate issues, more and more catastrophic weather events. Mm-hmm. So I think that the awareness of the effects of climate change has grown in such a way that it is really difficult. It will be more and more difficult to deny the necessity of acting very strongly. And third, we have now the new US administration. We have John Kerry with President Biden and the whole US government engaged very, very actively. And together with the European countries, they joined us in the fight, and they are very, very active. So I hope that we will create facts in implementing our goals, in stepping up our climate ambitions, each nation, which will make it anyway not possible to go backwards, because it would be so dramatic, so terrible for the whole world.
Ambassador, we've covered a lot of ground. We've talked about security policy, we've talked about foreign policy, we've talked about the way we're going to progress the planet, hopefully with better sustainability goals. My question to you is, as you look to work in a more coordinated fashion with the new administration in Washington, what does that look like? President Macron said recently that he will judge President Biden not on his words, and you talked at the beginning about having lots of meetings and things are going to be progressing, but he said he would judge him not on words but on actions. Ambassador, what actions do you need to see from the United States to improve the relationship between the United States and France?
It is exactly what we are discussing now. The two presidents have decided already some very important principles about the importance of French and European action and presence in the Indo-Pacific. You know that France is an Indo-Pacific country. We have territories, we have populations, we have permanent armed forces in the Indian Ocean and in the Pacific Ocean. So this recognition by the US means that we will continue to work together and we will increase our cooperation, because now even the EU has an Indo-Pacific strategy, and it's the first field of common action and consultation. Then there is this debate, but which is now a very constructive discussion on the fact that a more capable European defense is something which is good for the US, for the alliance, complementary to NATO. And third, an element we didn't discuss now, but which is already in the statement, is that the US will reinforce its support to our fight and the fight of the Europeans against terrorism in Africa, in Sahel, alongside the African nations, the Sahelian nations, which is also something which is important, which is concrete. And it is important for our security. Again, it is not like all the rest, all the other points. It is not only good for the African countries to find security, sovereignty. It is not only good for the European neighbors of Africa, it's also good for the US to fight efficiently against Al-Qaeda, against ISIS, which remain a threat, a real threat.
And US military infrastructure, a prerequisite for that continuing. Ambassador, thank you very much indeed for your time today. We greatly appreciate it. Philippe Etienne, the French ambassador to the US. And of course, our thanks to AMH, Bloomberg's Anne-Marie Hodan. Let's talk about where we are with the markets. We're closed here in Europe. Negative day, but not by much. We're well off our lows. Little bit of a tick during the auction, but not much. There's the FTSE 100, down by 0.2%. The DAX down a little bit more. The CAC 40 down by 0.3%. We're about to, Alex, though, get a big name from Paris, which I think could have a huge impact on tomorrow morning's opening for the CAC 40.
Yep, the appetite for those $2,000 bags, other luxury goods. LVMH will be out with third quarter sales numbers in just a few moments. We will have instant reaction for you, particularly from demand from China, with Sweeta Ramachandran, GAM investment manager, next. This is Bloomberg.
This is Bloomberg Markets, the European close. I'm Laura Wright. You're looking at live pictures of the principal room. Coming up, Valerie Grant, AllianceBernstein's Senior Vice President and Senior Portfolio Manager at 2 p.m. New York. This is Bloomberg.
All right, breaking news for you, LVMH third quarter results come out, look pretty strong. Their fashion leather goods organic revenue is up 24%, beating estimates. The company says they're confident in the continuation of current growth here. Their revenue also topped estimates, coming in 15.5 billion euros. So pretty strong for the luxury retailer. Want to get more with Sweeta Ramachandran, a GAM investment manager. So you're just getting these numbers like we are. What stands out to you?
Certainly the fashion and leather goods segment which is the key driver of the business, driving about 2/3 of the profit. What's interesting is the 2-year stack, which is really the normalized way of looking at this business, has decelerated only very mildly from 40% in the second quarter to plus 38% in the third quarter. And I think that will definitely reassure investors, considering that Q3 did have some specificity, such as localized lockdowns in China and much of Southeast Asia, which would have depressed demand, despite which I suspect a very enthusiastic US consumer and a resurgent European consumer would have contributed to this number.
Okay, so the US strong, Europe potentially strong, but I'm wondering about kind of what we actually are learning here about China. The concern was that common prosperity ultimately would eat into demand. Is it too early to see that happening yet?
There was certainly a knee-jerk reaction to the common prosperity headlines because it came on the heels of some heavy regulatory intervention by the Chinese government in areas such as education and technology. What common prosperity is actually trying to do is to expand the size of the middle class, which is exactly the thematic that LVMH's goods play well into, because 70% of their consumers in China in any given year are new consumers. So it's very much a recruitment market driven by the growth of the middle class. So I think beyond that initial knee-jerk negative reaction, the market came to digest that this is actually a long-term positive for the sector.
What about the supply chain issues that have kind of hurt every other retailer? Where are we seeing that?
Yeah, I think that will be perhaps in watches and jewelry, where the growth was a little lighter than expected. That may be one area in which supply chain issues did affect them. That said, at the first half results, management was very adamant in explaining that they have a much cleaner and simpler supply chain than many other players in other industries, given the vast majority of their fashion and leather goods items are made in Italy and France. They're not sourcing components in one part of the world, assembling them in another, and then selling them on in another yet. So compared to a lot of industries, they're relatively better able to withstand supply chain pressures, in addition to which they have strong pricing power.
Supply chains, though, presumably might affect spirits and champagne. Are we going to see an effect there?
That is typically more of a natural supply chain, but because of the harvest and the cycle of the harvest and how that affects demand, more than specifically, there may be some short-term issues with glass as well, but I suspect that's more to do with the natural cycle, the harvest cycle.
Okay, let's talk a bit about what's happening. Let's go back to the jewelry side of the business. We were just showing you some pictures of Tiffany. I would have thought that Tiffany would have made a bigger contribution here. As you say, maybe the hard jewelry side of things not delivering quite what we anticipated. Is that a Tiffany problem or is that a different problem?
I would suspect that's more of a different problem, given that the Tiffany acquisition was completed at the start of this year. Those numbers wouldn't necessarily be in the organic growth figures. And I think the breakdown that we will get in the presentation shortly, as well as on the call, will highlight that Tiffany has actually performed quite well for the company. And perhaps it's in the legacy watch brands that we're seeing a little bit of residual weakness.
Okay, Sweta, great analysis. Thank you very much indeed for jumping in just as we got the numbers. Really appreciated. Sweta Ramachandran, GAM Investment Manager on LVMH. That'll have an impact certainly on the CAC opening tomorrow. I want to take you to DC, though, and talk about what is happening there. I think Nancy Pelosi's press conference today was actually closed in a way that it normally isn't. But anyway, we're getting some comments. Nancy Pelosi saying she's disappointed that we're not going forward with the original 3.5 human infrastructure plan. There are the pictures there. She's saying we must address the supply chain issue, impacts everything. Choices must be made if reducing the Biden agenda top line. So basically she's saying is, what are we going to cut? She's looking at cutting a number of years covered by the agenda, which is a way of fixing this in terms of allowing the maths to work. Proposal allowing the Treasury to raise the debt cap, she says, has merit. More analysis to follow, I suspect, with David Weston on Balance of Power. This is Bloomberg. So the first thing to say is that I'm mildly relieved that today is coming to a close. So we should probably, Alex, talk about what is happening over the next 24 hours. It's been an interesting day today. Tomorrow, I hope, is interesting in a better way. So what have we got coming up in the next 24 hours? Today, the House is going to vote on the debt limit, which has been hearing from Nancy Pelosi. But kind of tomorrow's the really big story. like earnings and CPI. It's going to be a massive day.
You're taking my stuff. Stop taking my stuff. As Guy's saying, okay, yes, inflation numbers out tomorrow. We're going to have sort of the inflation expert on the show breaking all of that down for us. Plus, we have earnings from JP Morgan, but also BlackRock. Love to see those kind of flows. And also Delta Airlines. Sort of, I'm obviously interested in the fuel costs and the hedging, kind of what they're doing in relation to that. So that wraps up for me and Guy on television, but stay with Balance of Power with David Weston on Bloomberg Television and radio, breaking down those headlines from D.C. And Guy, you and I off to the cable.
We are. We're going to talk about what's just been said by Lord David Frost. Lord Frost. We'll figure out exactly what that means for the Brexit narrative. Plus, we'll look ahead to tomorrow. Anyway, the cable is coming up on DAB Digital Radio. This is Bloomberg.